Bitcoin breaking through $17,000 today. What is going on? Also, news. Citibank put out a report. This is a bank. They put out a report saying that they expect that the price of Bitcoin will cross $300,000. That's not yen. That's not Pokemon cards. That's $300,000 by December 2021. Gonna read the report and look into what Citibank is seeing that I'm not seeing, because I only predicted $100,000 by the end of 2020, and I didn't even say by the end of 2020, but I did say 100,000. But why does Citibank believe that Bitcoin will cross $300,000 by the end of 2021? Gonna talk about it right here in this video, so make sure you guys stay tuned. What's going on, crypto fanatics, day trading fanatics, and every other type of fanatic that's watching this video? What's good? My name's Patrick Wieland. If you haven't watched one of my videos before, you don't know what we're about here. We're about making that money on the regular every single day and just stacking up all the profits. Today, we're talking about Bitcoin. And if you're interested in Bitcoin, you want to learn more about Bitcoin, make sure you hit that subscribe button. Definitely going to be talking a lot more about Bitcoin in the next few years and going over any type of news that is relevant to the Bitcoin space. So let's take a look. This report came out just yesterday, or I guess it got leaked over the weekend. It got leaked on Twitter, a report from the Citibank executive noting that Bitcoin is going through a very similar period to that of gold in the 1970s and expects a potential breakout next year. I thought we were already breaking out. $17,000 seems like a nice breakout, but Citibank believes that it's going to go much higher than that. So obviously Citibank is a big player on Wall Street. Citibank, this is not like some mom and pop shop. This is a big major bank. And Thomas Fitzpatrick, the managing director at Citibank, expressed his views on Bitcoin in a report for the bank's institutional clients. In the report, Fitzpatrick cites similarities between Bitcoin and the gold markets in the 1970s. He notes that Bitcoin's journey so far consists of major price swings, exactly the kind that can sustain a long-term trend. The report got leaked out on Twitter, and we're going to kind of look at the report now and read through it. What are they talking about? So in the report, it says that Bitcoin is the 21st century gold, and it is they're kind of going through giving us reasons and theories behind why they believe Bitcoin is going to go higher. Now, this report, as you can see here, the report was sent out to institutional clients only, and this was leaked out on the internet. So obviously, Citibank has high net worth individuals, and they send out reports to institutional clients, so institutional clients can look at the overall market, where they should put their money and things like that. In the report, it starts out by saying that the whole existence of Bitcoin has been characterized by unthinkable rallies followed by painful corrections. And that is the type of pattern that sustains a long-term trend. The first major rally on the Bitcoin chart came into the mainstream media, and it was an exponential move from 2010 to 2011. And they said that this is interesting for two reasons. That surge, as it came into the mainstream media, was very reminiscent of what happened to gold as it was allowed to float in the early 1970s after the 50 years of trading in the $20 to $35 range. With regard to the gold price, was a structural change in the modern day monetary regime as it broke the orthodox relationship between the fiat currencies and gold, ushering in a world of fiscal indisciplines, deficits, and inflation. The Bitcoin moved in the aftermath of the great financial crisis, which saw a new change in the monetary regime as we went to 0% interest rates and massive QE. And then the report goes on to ask a question that, are we on the cusp of another structural development? A number of things come into mind with that respect. So the first is, with the onset of the new crisis, fiscal orthodox has gone out the window and will likely continue that way. The central bank of the world has given two pieces of very clear guidance in recent years about how monetary policy is being reshaped in possibly the most dramatic fashion since floating gold in the 1970s, even more so than the introduction of QE in the last cycle. The first guidance was before the pandemic hit in an assessment of actions before the financial crisis. Remember the phase correctly. It was something like better a dime today than a dollar tomorrow. In essence, the conclusion was that it was better if a crisis developed to hit it hard and early rather than over time. The big bazooka, effectively, true to their words. That is exactly what they did as the pandemic rolled financial markets in February and March this year. The second is this monumental guidance was the indication as the economy, inflation, and employment pick up, they will not look to constrain monetary policy in the same fashion that they have in the past. In the report, Citibank goes on to say that Bitcoin is the new gold. It is an asset with limited supply. It is digital. This is the 21st century, and gold is the 20th century asset. It moves across borders easily, and ownership is opaque. The last point is they believe, very relevant, that huge fiscal deterioration today has cost in the future, either directly or indirectly. Directly, it is at the same point that bills have to be paid, which means at some time in the future, the money needs to be found. While Bitcoin may become subject to more regulatory constraints going forward, it is a natural store of money to avoid this. Indirectly, the argument can be the debasement of fiat currencies by creating high nominal growth and inflation, effectively a soft default, which they said, I do not believe hard default, particularly in the world's reserve currency, is a real concern. However, in lesser currencies, it could well be. They went on to say that central banks are increasingly discussing digitalizing their currencies. This is a double-edged sword. On one side, it creates a much more effective mechanism for distributing stimuluses, particularly fiscal. It also makes capital confiscation easier with the idea of negative interest rates. Both these scenarios would look to me to be positive for Bitcoin, and in the 21st century give us the digital equivalent, Bitcoin versus fiat digital, of what we saw in the 20th century when the financial regime changed gold versus fiat paper. So then they talked about looking at the chart. They said in 2011 that Bitcoin retraced 93% over 5 months. We've talked about that before. Bitcoin makes parabolic moves to the upside and then kind of bleeds out back to the norm, to the trend line, and then starts to move higher from there. It's not a myth. You can look at the chart. It's done this over and over. It had these cycles over and over. Here is the weekly chart that they pulled up. As you can see, they're mapping this out. They're mapping out a move from December 2018. They're mapping out that move from that $5,000, $6,000 area, $3,000 really, up to a $300,000 price by the end of 2021. And as you can see here in the chart, technically it works. If you look at the chart, technically it works. So what do we have? We have Citibank putting out this report, sending it to all their institutional investors, talking about how Bitcoin is the 21st century gold. That's very bullish, obviously. The more and more that institutional investors try to go and buy Bitcoin, they want to buy Bitcoin. Well, it's going to make the price of Bitcoin obviously go higher, right? The big thing also is recently, Grayscale. Also, let's talk about some big players that loaded up on Bitcoin recently. If you look at a company, MicroStrategy, they have a total of 38,000 Bitcoin that they bought in 2020 with an average price of $11,000. And obviously they're sitting amazing right now as Bitcoin is going higher. The CEO also came out that said that he personally owns 17,000 Bitcoin with a aggregate purchase of nearly $240 million. Also, Jack Dorsey-backed Square Inc. poured a massive $50 million into Bitcoin, declaring that they purchased over 4,700 Bitcoin at an average price of $10,000. Another big name on Wall Street, Stone Ridge Asset Management, bought over $100 million worth of Bitcoin as well as its primary treasury reserve asset. They raised over $50 million in equity funding to buy more Bitcoin. You look at a company like Grayscale that has a massive $700 million plus institutional money in the Grayscale Bitcoin Trust, and then Grayscale also has a massive position in Bitcoin as well, buying a ton of Bitcoin back in October as well. You're having all these big institutions, these big funds loading up on Bitcoin, expecting a massive rally. And like I've said before, I believe this is only the beginning for Bitcoin, and we're going to see another massive move here in the future. Now, does that mean that Bitcoin won't pull back? I would love to see Bitcoin pull back to the $13,000, $11,000 area. $13,000 was previous resistance, so we know how that works. If we get a nice little pullback to that previous resistance, to that $13,000 area, turn that into support, it could be a very bullish move. So I would love to see Bitcoin pull back to that $13,000 area, buy some more at the $13,000 area, and then look for the next leg up to the $20,000 to $30,000 area after that. So lots of momentum behind Bitcoin. And the funny thing is that the overall volume in Bitcoin is down in terms of trading and buying and selling. There's overall the momentum, the volume is down, but the price of Bitcoin keeps going higher. And that leads me to believe that institutional investors, that big money, are loading up, and it's not so much retail traders buying and selling. There's really not a ton of hype. You know, Bitcoin's not being talked about everywhere just yet, and we know how that goes. Once Uber drivers start talking about Bitcoin, then we might be at the top of that move. But as of right now, Bitcoin's still kind of flying under the radar, even though it's making these massive moves. And I don't know if that's because the media just doesn't have incentive to talk about Bitcoin as much as they have incentive to talk about coronavirus and things like that. But at the end of the day, Bitcoin is making this move, and it's happening with or without me and you. But luckily, I'm in Bitcoin. I've been talking about Bitcoin, buying Bitcoin since March. So hopefully you guys loaded up back in March, or at least just bought $1,000, $100, $500 worth of Bitcoin back then in March, because now you'd be up close to 200%. So there it is, Bitcoin, $300,000 by the end of 2021. I don't know about you guys, that sounds pretty amazing. Citibank, they're bullish on Bitcoin. I'm bullish on Bitcoin. You should be bullish on Bitcoin. The plan from here on out is just to buy as much Bitcoin as possible at good prices. You know, I don't want to buy at 17. I want to buy at like 13. Maybe it doesn't pull back. Maybe it goes to 20 and then just keep going higher and higher forever. But we'll see what happens. Bitcoin, let's go. Hit that subscribe button, hit the like button, all the buttons down below. I'll talk to you guys later. Bye.